What's better than earning money from a 9-to-5 job? It's earning money while you sleep, which is made possible if you start investing. You're listening to the Real Estate Investing Demystified with your very own dynamic duo, Ava Benisaki and August Biniaz. Tune in as we discuss everything real estate, both on the passive and active sides. We feature life-changing stories of today's real estate leaders that will help build your own roadmap to success. This is the show that will lead you to a diversified portfolio, a much bigger revenue, and a next-level venture that brings you a smooth cash flow. Let's get this episode started. All right, so today we're joined by Kent Ritter.
Yeah, I've been following Kent for a little while now. I find his story very interesting. He has a podcast, so I've watched a few of his episodes. And for preparation for this show, I watched a few times. He's been on other people's podcasts, so I'm really excited having him on our show. Again, it goes into his journey about, being involved in different businesses and building companies, but then eventually getting involved in real estate private equity, building a real estate private equity firm, and his whole journey through the whole way. And I think
if I'm not mistaken, I believe he started out as a passive investor and then kind of started his real estate private equity firm. So right. I'm really excited to dive into things with you, Kent. But before we begin, I want to do a quick introduction of who you are. Now, everybody listening, Kent is actually a former startup owner and corporate executive turned real estate investor and multifamily operator. Kent is on a mission to empower others to take control of their financial future while making a positive social impact by providing modern, affordable housing to America's workforce. Now, Kent believes that good investing starts with education. So he hosts a successful podcast called Ritter on Real Estate, where he interviews the pros to teach you how to invest like a pro. Additionally, Kent hosts a monthly multifamily investing meeting in his hometown of Indianapolis. So we're really excited to dive into. Let's get things started by, tell us about your background and then your start in real estate, please.
Take your time, yeah.
Get
right into it. Happy to. I studied finance and economics in college, came out of school, not really knowing what I wanted to be yet, I would say, right? I always had an entrepreneurial tilt. I always knew I wanted to own my own company, but I didn't really know what that was yet. So I decided to go into management consulting because I thought management consulting would be a really good way to get to travel and see a lot of businesses and kind of understand how things work and learn how to solve problems. And so I spent 12 years of my career doing that, living in Chicago at the time and traveling all over the country. Over that time, worked with hundreds, if not 1,000 different businesses and got pretty good at that, solving problems, running projects, and just learning what works in businesses and what makes them successful and what makes them not successful. And over that time is a lot more than not successful because that was why people hired us, to solve problems they couldn't solve themselves. And so it was just a really good base and really good understanding of how to operate a business and also how to manage people and how to influence and how to run large scale projects and keep everybody in line because we were doing multi-million-dollar projects at these clients. And then in 2010, some colleagues and I left the consulting firm where we were working because we really saw the market taking a shift. We saw technology changing, and we didn't feel the company that we were working at was following that shift. We felt like they were just kind of heads down and they were going to get left behind. So we left and started our own business, really focusing on where we thought the market was going. And for some luck, but also I think because we were willing to take the risk, we had a huge success, and we grew the company from really kind of originally kind of 5 guys around a kitchen table to 95 employees and 30 million in annual revenue in about 5 years. And in 2015, we decided it was time to sell that business. And so we sold the business, and that was really about the time that I started my real estate investing career because I had capital from selling the business. I didn't want to put all my eggs in one basket in the stock market. I was already investing in the stock market, and I realized I needed to diversify. And so that was really what started me looking into alternative assets, which led pretty quickly to say, like, real estate, I think, is the right one for me. And then from there, I had a pretty I tried a lot of stuff in real estate. I kind of did everything. From first thing was build out a portfolio, a note portfolio. So I was really lending, on the debt side. I started investing with other people in other syndications. I started doing fix and flips. I started, just buying some single families and duplexes. So in the first couple of years, I did a whole bunch of things just to kind of see what fit best, right? And in all that, I very quickly learned that debt wasn't for me because uh, I had a note on a house. So I sold a house on contract, and then the guy that owned the house sold the house about a year later, and he doubled his money. And I was just getting my loan paid back, which is great, right? You get your loan paid back, that's a win. But I was like, man, this guy just doubled his money. He's like, I need to be buying these houses, not just giving loans on these. And so that led to the fix and flips, which is a hard job. I mean, it's a full-time job. It's ordinary income. So you're getting taxed all over the place, and it's a difficult business. And to me, it wasn't scalable. And that was kind of same things with the single families and the duplexes, got up to a portfolio of about 11 of them, did the math on how many houses I would have to acquire to get to the income level I wanted to get to. And I was like, man, that's going to be really difficult to buy that many houses. Mm-hmm. And so all this journey kind of led me to multifamily. And at that time I was just educating myself with podcasts and YouTube videos and books. And then that led to seminars and conferences and all these things. And everything was just leading me to multifamily and as a way to scale, and is just an asset class that I feel is one of the most insulated, because everybody needs a place to live. We've all proven we don't need a place to work, right? You can work from home, but we all need a place to live. And so that was one of the aspects I really liked about it. I think if you can keep things simple, and just really fundamental, it's a good way to approach investing. And at the end of the day, everybody needs a place to live. It's a common human need. And so anyway, multifamily made a ton of sense to me. I was still just going to go out. I was still thinking very kind of singularly on my own, that I'm going to go out and, okay, I'm going to buy a 50 unit or, something, and I'm going to buy it and own it. And luckily at that point in my life, a mentor, I met a mentor, and he kind of stepped in, and he's like, okay, well, you buy a 50 unit, then what do you do? He's like, all your money is still in one basket. It's in that, you can't scale from there. You're just running this property. He's like, do you want to be a landlord like that? And no, I didn't. Don't like being a landlord. So turned me on to syndication. So, and when I learned about the syndication model, because me just coming from my consulting days, everything's about, scale, get bigger. And syndication just made a ton of sense, because all syndication really is pooling our money together to go buy something bigger and better than we could on our own. And so when the light bulb went off there, then it was kind of just off to the races. And I realized this is exactly what I want to do. And it allows me to bring in not just myself and improve my situation, but my community and improve everybody's situation. And so I know I kind of went way down the path there. I know you guys are just asking me to introduce myself, but I just got on a roll awesome. A little bit.
No, it was perfect. I was taking notes as you were going, and a lot of interesting kind of points to really dissect here. But one thing that we want to kind of touch on is the decision you make to when you're an investor, you're looking for other types of investments to invest. You compare, investing in the stock market, you want to diversify your portfolio, you start investing in real estate, and you start investing in this whole ecosystem of real estate and all the different types of asset classes, are all different strategies and business models. And then you talk about at some point you connect with a mentor. Talk to us about that. Were you pursuing a mentor? Was there a need there? Was it coincidental? Talk to us about that, because we really like to touch on it, because we really believe in this idea of mentors. Unfortunately, we have unsolicited mentors, but we've never got really a paid mentorship program, which we're looking to do, even though that our company has grown. But talk to us about what was that process for you to connect with this mentor? Talk to us a little bit more.
Yeah, sure. So, so that first mentor I met through, I actually met through a conference. So I met they were actually hosting a conference. I had listened to their podcast for a long time. I mean, it's the guy named Gino Barbaro, Jake and Gino. And they host a podcast. It was one of the first podcasts I started listening to back in, probably 2015 or so. And so I heard they were doing a conference, went down to check it out. And then, yeah, just decided to reach out. Felt like, I think I realize I'm humble enough to know that there's a lot I don't know. And there's a lot that I don't even know I don't know. And I felt at that time, like multifamily was a whole new frontier. And there was a heck of a lot I didn't know. And so I wanted to kind of, short circuit the process and avoid some mistakes. And also at that time, I didn't know it yet, but I needed to work a lot on my own mindset and my own limiting beliefs about what I could do. And, I think about it now, it's like I had already accomplished so much, but still, and I think everybody does, you never get over all of those things. Right. And even no matter how successful you are, you have things that come up, but I really realized that I had kind of some blockages about what I thought I could accomplish. And so my mentor was really able to help me get over those, crush some of those limiting beliefs, and just believe that, I could go out and I could buy a giant apartment building, and I could be successful and I could bring other people in. And so I met them kind of through their podcast and conference, and then got involved in their program. And this was that was probably 2017 when I joined their program. It was a paid thing. I know it's matured a lot since then, but it really was helpful because I think there's a Tony Robbins quote where it's like, you can turn, decades into days, or it's somebody's quote. And that's what I think mentors can help you do, because if you can learn from their mistakes and not step in every pothole along the way, you can save a lot of money and save a lot of time. And I do think that mentorship or coaching, I think everybody, like, when you think about a kid, you have coaches, all over the place, right? All the sports that you're doing, if you're doing music, if you're, whatever you're doing, right? You have teachers and coaches that are helping you. And when you're an adult, you kind of lose out on that. Like, the best thing most of us can hope for is, our boss gives us feedback every once in a while, right? And most bosses are terrible at that. So I think it's important to still, if you want to continue to grow, to still have people in your corner that are holding you accountable.
And the best in the world that are the goats at what they do, greatest of all time, they still have coaches to improve. So they're
Yes,
still out there with
absolutely.
coaches
100%.
improving, let alone people that are just
Yeah.
getting started in a space.
Yeah, and I
You
just
know,
want to say, Gino, good job on that, because Gino, we really love and respect him. He's been on our show before, and yeah,
Oh,
we
nice. Yeah, he's a
think the
good
world
guy.
of him. Yeah, he's a really good
Yeah, he's
guy.
a good guy.
Now let me get into another. Sorry, if I'm
Yeah,
like
go
doing,
for it.
there's
Go
a
for
bunch
it.
of things on top
There's
of my
things on
mind
your
here, so I
mind.
got to kind of get into. But there seems to be a great part here, because this is very important. You're involved in building a company, a startup. You eventually exited that startup. Now you're looking for different vehicles to invest through in different asset classes. Stock market, real estate, but and you've invested as a LP before in these syndicated investments.
Mhm.
What was it about real estate private equity or multifamily syndication that wanted you to start building a real estate business?
Yeah, good question. Because
Mm.
my mission really started out as, at first it was wanting to diversify and just kind of, make sure I was being smart with my money, and then we were able to build, continue to build our nest egg. And then what I realized after we sold the business, I mean, you don't just, at least we didn't, most people don't, you don't just get to like walk away and be like, all right, here's my check, thank you. Like we had an earn out period. So we had to, work for the company that we sold to, because they want to make sure that they actually get what they bought. And so I had to spend a number of years still at that company, and I really had just lost my passion for it. I mean, my passion really was for building my own business and for seeing that grow. And once we sold it, that was really gone. I was kind of just a corporate executive in a large organization, which is really just not me. I'm not built for the bureaucratic, political, like giant corporate world. And um, so I had this moment where I'm like, it's like early in the morning and I'm on the tarmac flying out to another client. We had just had my first daughter, and I had this moment of like realization slash like freak out, where I'm like, what am I doing? Like, I'm flying across the country. I've got a wife and a new baby at home. I'm not going to see him for 4 days. Like, why the hell am I doing this? And so that really became kind of the bigger mission was to create freedom, create, financial freedom, and create so that once I was done kind of with this earnout, I wouldn't have to go back into a position where I had to work all the time and be gone. Because as long as I was in consulting, whether I was owning the company or I was working for somebody else, I mean, that's what you do. You're gone, you travel. And so I knew I wanted to find a new path. And so that kind of became my mission of how do I create a job for myself or a business where I can have the freedom to do whatever I want when I want, right? I'm not trading my time for money. And I knew that through real estate, that's one of the best ways to do that is because, whether I'm there or not, the renters are still paying rent and we're still creating income. And I just had the visions of, being able to play with my kids at 2:00 in the afternoon or take them to the park or just do whatever I wanted. And then I would say as that came to fruition and I really found that freedom for myself, the other thing I realized in just talking to people, because you start doing things right and people ask you, oh, what are you doing? What are you investing in? Right. And you have enough of those conversations. And I realized like nobody knows about this stuff.
Yeah.
Shocking.
Like,
Shocking. We can't believe it ourselves that
Yeah.
so many
Yeah.
sophisticated people that we know,
They're like, what?
some
Yeah.
lawyers, accountants, these are, very, very sophisticated
Yeah.
people that have never heard about First time I talked to a Canadian lawyer 3 years ago about syndication, he had absolutely no idea what I meant by the word syndication. He was a securities lawyer that dealt with US deals. So just keep going.
Yeah. And so it's pretty incredible, and I didn't either. I mean, I didn't until maybe 2015 and I was on kind of like
Right.
the front end of this. But I fancied myself a savvy investor as well. And I never heard of it. So anyway, I'm realizing I see the positive financial impact it's had on my own life and my own net worth and my own freedom, and realizing nobody else knows about this. And my mission really from that point started to become less about me and what I can do for myself and more about like, wow, like I got to tell more people about this. Like I want my friends and family doing this because if everybody else can be putting themselves in a better financial situation, well, I mean, not that money makes you happy, but it sure doesn't hurt. Especially if you don't have to worry about money. And so
one thing quickly there, Kent, I got to just jump in very quickly.
Yeah.
Is okay, real estate is great. A lot of us, we could, if we believe in real estate, we can go to our friends, family, business associates and say, hey, invest in real estate. That's too broad. But particularly real estate, private equity, multifamily, we can see the track record and it's a performance-based compensation for the GP. That those splits that exist, the GP has to perform for them to get their promote or carried interest. They have to perform. So
that's right.
As long as you're partnering with the right GP, is a tremendous opportunity to invest in an investment where it's not just a real estate agent saying, hey, buy this property, it's a great area, you should most probably be cash flowing. No, the GP's whole job is to make sure this thing performs so they can get their carried interest.
Absolutely. As opposed to a realtor, they take their commission and they're done.
Or a contractor or anybody,
contractor.
any other conduit
Absolutely.
really involved in this real estate ecosystem. But sorry, keep going.
Yeah, that's right. And I think that's one of the most important things about any deal is that you've got aligned interests, right? And that there's skin in the game. And so my mission kind of became, and that's why I started my podcast. That was really an evolution of how do I tell more people about this,
Okay.
and really just started to kind of evangelize it. And so anyway, kind of my mission has evolved over time, I guess the point. And my mission now is really to help as many people get into these good type of investments as possible. Just one. And really, I do it through education. I don't try to do it through a hard sale. I just try to put educational content out there because I feel like if people can understand it the way that I understand it, then that light bulb is going to go off and they're going to say, yeah, this makes sense. I need to be doing this. And so that's really what it's all about right now.
Absolutely. Amazing.
Yes,
We
perfect.
can relate to you in so many ways. And yeah, we have a huge passion for helping others because we were totally shocked too when we realized not a lot of people knew about this. It can change people's lives around.
Absolutely,
So,
absolutely. But talking about startups, isn't a syndicated real estate project a mini startup on its own, each one? Doesn't it feel? I just came up
It
with that
is.
as we were. I was just writing. I'm like, doesn't it feel like a mini startup?
Yeah,
It's
totally.
because you're finding the deal, bringing on
Yeah.
investors, putting the structure together. You're putting the
Yeah.
offering memorandum, putting the deal presentation. It literally feels like a little, like
Absolutely.
a. I think
Yes.
that's essentially what it is. That's why we're.
Yeah, I mean, it absolutely is, right? Like our typical deal will have 3 to 4 different LLCs just for that specific deal, right? To create the structure that's needed.
Mhm.
Yeah, and you're going out and you're finding you're sourcing debt, you're sourcing equity, you have your own accounting. I mean, each one is a little business, or several actually little businesses in and of themselves.
Yeah,
Got it. Got it.
absolutely.
No, talking about. Go ahead. What
Yeah,
you
I
had
wanted to
there?
ask him the next question because I'm really curious on talk to us about your first deal, if you will. Did you allocate capital with a sponsor? Did you partner with your mentor? Talk to us a little bit about that, please.
Yeah, so I did a lot of different stuff at the beginning, right? So like my first multifamily deal, my first multifamily syndication deal was actually through a crowdfunding site. I went out to, I think it was 2015, was trying to just dip my toe in the water and went out to a crowdfunding site and made 2 investments.
Okay.
One of them went fine. It went exactly as planned. The other one, I still don't have all my money back.
Wow.
The sponsor actually was just a bad guy, and ended up cross collateralizing these loans and doing a bunch of stuff you're not supposed to do, and actually ended up losing the property.
Mm.
And so we're still, I think at this point, luckily it wasn't a lot of money because I was just dipping my toe in the water, but I think we're still trying to probably recoup about 80% of those dollars from that original deal back like 7 years ago now. So it just goes to show like a big part of my message is the sponsor matters more than the deal, the market, or anything else. And it's really from that lesson, because I mean, it was kind of shame on me. I didn't do my due diligence. I was just on a site and scrolling around and saying, hey, that looks good. It's in Houston. That's a good market. It's multifamily. It's what I'm trying to invest
Well,
in,
those
and
crowdfunding sites
click go.
advertise themselves as having a whole board that vets each operator that comes on their platform. That is essentially main part of their business idea, is that vetting process, and they
Mhm.
failed there.
Yeah. I mean, my sense of it is it's gotten a lot better in the last 7 years. I think back in 2015, it was kind of the Wild West. I think they were trying to grow and they were probably kind of letting everybody in. And now I think the controls are much better. I mean, I've been through some of those controls and being a sponsor that's put deals on crowdfunding sites. So I know that the controls are better. And I think that they can just be way more selective because so many people they have so much more like so many people want to be on the platforms now versus back then. So I think it's gotten better, but yeah, for whatever reason, it didn't work out, but I was just glad that I was smart enough to know, like, it wasn't real estate's fault. Like it was one bad deal that can happen. I didn't lose everything. And it's a great lesson. Like that's another reason to have mentors, right? Because you're going to pay for your education one way or the other. And I paid for this one with losing some of my capital.
In the negative way. Yeah, definitely.
Yeah.
Lessons learned. No, for sure.
Lessons learned.
So yeah, talk about your growth. So you obviously, this is a team sport, and a lot of times as real estate investments firms are being built, a lot of times the principals do partner with their coaches or mentors or advisors to build that track record. But talk to us about a transition on doing your deal, and please go in your deal specifically as either sole GP or lead GP, and talk to us about any difficulties you felt in that kind of first deal. Talk to us about that journey. Any good stories you can share?
Yeah, sure. So I had a little bit of a winding path in that. So another one of my mentors kind of comes into the picture. So in 2019, October, it was October 2019, was when I was on the GP side of my first syndication. So from really 15 to 19, I was doing a bunch of other stuff and then like passively investing in other people's deals, in a whole bunch of them. And then by 19, I'd felt like I had learned enough, felt like I understood it, met some guys I could partner with at a conference. And we went out and we bought 250 units down in Atlanta, 2 different portfolio deal, 2 properties. But that was the first time I was like a co-GP. I was on the GP side of the fence.
20% rent growth in Atlanta in some markets. So
Nice.
keep
Yeah.
going.
Yeah. I mean, it was a home run of a deal. And yeah, so anyway, so that was the first one. And then, probably after that, I'm coming back to Indianapolis. I'm telling one of my mentors here in town about it. And I think he was kind of like, wow, you actually did it. Like you went out and did it. And he owns a large private equity firm here in Indianapolis. And I think they have about 20,000 units. That's what they focus on, is multifamily. And he was like, he proposed to me, he's like, why don't you come on? I know you want to build your brand. I know you want to build this, but why don't you come on our platform, and you can use like our platform to catapult yourself. And we devised kind of a specific strategy I would focus on. And it was kind of like a startup within a larger ecosystem, if you will, where I'd come on, build my own team, focus on a specific type of and size of properties, because they were buying above 200 units because they were just so large. But we recognized there was opportunity below 200 units. He said, well, I could come in and build a team to focus on 200 units and below. And so
geographically within Indianapolis, that and is
no, I mean, nationwide.
Okay.
Nationwide. We ended up focusing around the Midwest, but yeah, I mean, they're national. And so I did that. So I built a small team, partnered with some folks inside. And it was kind of like a little startup within this larger corporate, but I was able to use, their HR and accounting, and there was a lot of benefits. So I spent 15 months with them doing that in 2020 to kind of May of 2021. And so in that time, really led the acquisition of 4 deals with them. And I mean, the first deal that we did, which was the first one where I was really the lead on it, was a 30 unit in Louisville, Kentucky. And we still own it right now. And I mean, it's a little gem. It was built in 2010. Great property, no frills, but just, nice floor plans. And we saw that it was a mom and pop owner who was leaving a lot of meat on the bone. There was good upside on rents and expenses. And so yeah, that was the first one. And that was the first one that I really led the acquisition, raised the equity, secured the debt, kind of did everything.
Amazing. Yeah, because he had, on these larger companies, they have all their systems and processes in place, and they could pretty much hand you the blueprint, which is really smart for you to
systems,
partner.
softwares, accountants, all the analysts, CoStar, and many other subscriptions.
So
that
anybody
they have.
listening, if you're looking to build a real estate private equity firm from the ground up, partner with somebody who's got the system and processes in place, and don't try to reinvent the wheel yourself, because it definitely can save you a lot of time.
Well, I don't think that person is going to be that. That group must have seen something special, for them to even open the doors, because
Bring
they
them
don't.
under
That,
his wing,
that
yeah.
doesn't usually happen. So they
Yeah.
must have seen something there. But another question for you here is, where do you excel? Is it on that, being the acquisition director, making those connections with brokers, finding those off-market deals, underwriting deals, doing physical due diligence? Is it on asset management, overseeing the property manager, overseeing the renovation contractor if needed? Is it on the equity side? Are you a superstar, and is it all of the above?
Well, I've worn all the hats for a long time. So, I mean, even today, I still do a little bit of everything. And that's part of, where I am in my journey and with Hudson Investing is I've got to start to take some of those hats off and hand those hats to others. And I'm kind of in the process right now, as we've grown pretty significantly over the past year. But yeah, I don't know. I would say I've done them all. I can do them all. I think my favorite thing to do, I really like talking to investors. I especially like talking to like new investors, because like those light bulb moments, right? Where they're like, yeah, this makes total sense. Some of the pros and cons, though, is like the bigger you get, the less conversations you can have with those new investors, because you start to get into being able to, only do accredited deals, and you just get into larger check sizes where it's tough to bring in 300 people at 50 grand, right? You start to move on to maybe more sophisticated partners. But I think my favorite thing is finding those kind of diamond in the rough properties, and just being able to see like something that nobody else sees, and say like, like this, it doesn't look very pretty now, but like it could really be something, and be able to create a ton of value and kind of put the plan together.
Your first deal was in Atlanta in 2019. It has the highest rent growth than any other city in the U.S.
That's a gem. If there's
That's right. That's right. That one was, everybody knew that was going to be a good deal. That was going to be a good one. Since then, we've done in the Midwest, we've done some direct to seller stuff. We've done some smaller stuff, definitely some stuff where you just kind of have to, brush the dirt off of, but created tremendous value. I mean, a couple of our properties today, I mean, rents are going up 40 and 50% from where they were, just because, it's an owner who was kind of asleep at the wheel and hadn't raised rents in 5 or 6 years. And so just bringing them up to market, there's tremendous opportunity. And so I love finding opportunities like that.
Isn't that exciting? Yeah. And then showing those opportunities to your investors and saying, hey, look at what I got for you.
Absolutely.
And hand it over on a platter.
But talking about rent growth, talking about those, tremendous returns to investors, we are currently in an increasing interest rate environment. And as interest rates increase, the yields decrease and the cash on cash decreases to investors. What are your plans currently? Specifically, you're now in a situation where you're building your company. You're very focused on the acquisition side. How are you penciling deals currently? Are you aggressively looking at deals? Are you having a dry powder ready to deploy? Are you waiting for the next increase in interest rates in June coming here in the next few days, I believe mid-June? Where are you at? Talk to us about your strategy in this environment.
Yeah. No, interest rates are, how do I say this in the right way? They're a good headline grabber, right? But they're just one variable. I personally think, and I will answer your question because we are doing a lot to mitigate interest rates, but looking globally, like at a macro level, I think there's a lot of levers that are going to move multifamily in a positive direction, and just commercial real estate in a positive direction, that are going to overpower whatever happens in interest rates. I look a lot at the forward curves for interest rates. And when you look at the forward curves, it shows you what the expectation is, right? And the expectation is that rates continue to rise over the next year, and then they start to come down and they start to level out. I mean, we don't end up in an environment like we have been in the past, 5 years, or really since kind of 2010 even, but that was an anomaly, right? That was an anomaly. That was a good period, but I think we landed somewhere where interest rates are kind of normal, like they were, more like into the 90s and kind of early 2000s. And so I don't think that it's going to be this monumental where like interest rates go to 8-10% for an extended period of time. But that being said, I think what we're doing is first of all, we underwrite our deals to those forward curves. So the forward curves are always wrong because it's just the best information that we have right now, but it's the best information we have right now of what people expect interest rates to do and where they expect them to be at a certain period in time. So we underwrite that curve right into our deal so that over the life cycle of our deal, the interest rate's going up and it's coming down, it's kind of stabilizing. So that's factored in right away. So if we're comfortable with the deal, with what we expect to happening, then what we need to think about is, well, how do we protect the downside for the unexpected, right? For that 8-10% interest rate that I don't believe will happen, but I don't have a crystal ball. And the way you do that is with an interest rate cap. And so our methodology is basically to underwrite to the curve and then to cap it just above where we think that curve is going to go. Because without getting into too much detail, if you cap it below, if you cap it like on the curve, then the bank is already expecting to have to pay you, and they're just adding whatever they think they're going to have to pay you onto what you pay them up front in the premium. So you're kind of prepaying. So we cap it kind of right above. So we say, okay, the curve's going to do this, and we put the cap right here at the top. So if it goes up, we're protected, because if it goes higher than that, then a bank is paying us for that difference, right? And so we're protected from interest rate risk in that way. So I think you have to be underwriting your deals at realistic rates. I think the best way to do it is actually based on those curves and the ebbs and flows of interest rates. And then I think you should be putting a cap on. The other thing that we've done in deals, because we've got 2 deals now that we got under contract in March and April, and things have changed a lot since March and April. And so a couple of things we've done on those deals is just add in extra, what we call an interest carry, which is an extra cash cushion, just to stabilize cash flows in case interest rates do move up faster than we expect, but still below that cap. But making sure that we just have plenty of cash flow to pay the debt service, in case rates move faster than we can increase cash flows with rents and things. Now, the thing that's happened over that time is, yes, interest rates have gone up, but rent growth has grown 2 to 3x on these properties, more than what rates have. And so the fundamentals on all of those projects, those two I mentioned, have gotten better as we've held them before we've even closed on the properties. Because I mean, we are still underwriting pretty conservative rent growth at, I mean, a max of 5% this year. And in the markets we're in, rents have grown 12 in one market and I think 9 in another market. And so I think like interest rates are one lever you can pull, right? Like that's the FUD, the fear, uncertainty, death, that the news sells everyone. But if you understand it, I think at a broader level, the things that haven't changed is we still have a massive housing shortage in this country. There's not enough. And all the interest rates rising have done is push people out of single family and push them into rentals, right? Because people can't afford the house that they wanted anymore. All the supply chain issues have slowed construction and made it more expensive. And so we're still seeing this massive, this massive discrepancy in housing. And at the end of the day, like we said at the beginning, like people always need a place to live, right? I mean, at the end of the day, you need a place to live. And I told you, I studied economics in college, and like Econ 101 is, if supply and demand are out of line for a long enough time, then prices adjust. And I think that's what we're seeing from a rent standpoint. We're seeing an extremely high demand. We're seeing not enough supply, and therefore we're seeing rent prices continue to grow and grow and grow.
Tremendous. And that's the beauty about multifamily in these regions within the US, not all of them, but some regions, is that there is no rent control. You can change the rent annually, right? Where, unlike Canada, where there is rent control. So
at 1.5% per annum.
Restricted at 1.5%, but the rent growth in that market could be up 10%, 15%. But for your tenant, you have no option of evicting or increasing rent. So there's a lot of Canadian multifamily investors drooling, listening to your very nonchalant 5%. They're like, we wish we could do it just to 2.5.
Well, and I mean that actually makes me extremely uncomfortable, because I don't like to be expecting over 3%. But at a certain point, I have to like come to reality and say, like, look, the reality is that if rents are growing double, triple that, I should at least show 5.
I think wage growth is at 6% already, so that should cover it right there. But that's above your 5.
Yeah, I mean that's the other thing that we're seeing, that is, and we're seeing it significantly in the Midwest, is, I mean, we're seeing like warehousing jobs here in Indianapolis where folks were making $18 an hour, now they're making $23 an hour. I mean, that's a significant bump. And so we are seeing a ton of wage growth as well, which I think is different than in past inflationary periods. And it's happening more in those blue collar jobs.
Amazing. Awesome.
All right, Kent, before we move on to the next segment of our show, a quick question for you. What would be your advice to an investor looking to start investing in real estate private equity?
Passively
investing in real estate private
equity. Okay, because my answer is different.
Yeah. Thank you.
My advice, if you want to invest passively, is go to kentritter.com, start to educate yourself on the terms and FAQs.
Yes. And make sure you say you've seen it here so we can get our commission as well. Right?
Right. Because there's a lot of jargon, and there's a lot of like it's not the most approachable thing at the beginning, because it's just unfamiliar, right? And I think where there's unfamiliarity, there's just implied risk. Right. I mean, that's how I look at it, is because really it's not a risky investment, relatively speaking, if you look at risk adjusted returns. But just as humans, where it's unfamiliar, we view that as risky, right? Our crocodile brain says like, stay away. And so I'm kidding about going to the website, even though there are FAQs and terms on the website.
Go to the website.
Just start to educate.
We'll have it in the show notes. Definitely go to the website.
The first thing is start to educate yourself. I did it with podcasts and books at first. That was how I started. I started just listening to all the real estate podcasts I could to try to understand what's going on, and then start networking with with syndicators, because you have to find folks. Like I do think it's a better approach to create one-on-one relationships with syndicators than it is to do the crowdfunding approach that I did. I mean,
Wow.
I
Great
just
advice.
think that you can. I just think it's really important. Like we talked about earlier, the sponsor is the most important part of the deal, and I think you need to get that gut check with the person and make sure you resonate with that person. It's somebody that you want to do business with, because these are long deals. These are 5-year typical projects, right? It's like a mini marriage.
It is.
So
Yeah.
Very
Awesome, man.
good, amazing advice.
All
I
right, man.
love
Hey,
it.
we're going to move to our second segment of our show, but I want to say
Sure.
really appreciate your transparency, everything you shared. And, I told you he's a pro because
Yeah.
he has his own podcast, so he can be an excellent guest for us. So I'm really happy to have you.
It's been
Hey,
very
man,
valuable.
thanks
Thank
for
you.
everything you shared. So let's do
The 10 championship rounds to financial freedom. Ready for this, Kent?
I hope so.
Whatever comes top of mind, just have fun with it. First question.
All right.
Who is the most influential person in your life?
The most influential person in my life, man. I think my wife is the most influential person in my life. I think she's the person I listen to the most. If I followed her advice more, I'd probably be better off. But yeah,
Amazing. And you have 3 kids, right?
we have 3 kids.
Wow,
They're definitely close second. 2 girls and a boy, 6,
Wow.
5, and 3.
Wow,
Amazing. It's the
amazing.
most common answer is people all our guests want to be in good books with their wives. So that's what
Yeah, well, I'm definitely going to show her this clip later.
Absolutely. All right, next question. What is the number 1 book you'd recommend?
Number 1 book I'd recommend. Well, one of my favorite books I've read in the past year is called Deep Work, and it's
I have it here.
really.
Oh, really?
Yeah, have you read it? Yeah, it's good. It really just focuses on the need to have these long blocks of focused time, and how just unproductive it is to have kind of these days that are filled with half-hour gaps in between meetings, and you really just can't get anything done. And so you need long blocks of time to really focus on important tasks. And some weeks I do better at implementing that than others, but when I do, I am so much more productive, and I'm amazed at how much I can get done.
Amazing.
Isn't it a good feeling when you get yourself in that focused state of mind and you actually
It is. Yeah, it talks a
something?
lot about flow and kind of that consciousness state in that book. So definitely a lot of good lessons.
Especially
Awesome.
since I got my hands on those limitless pills. I just take a couple.
Yeah,
I'm good.
Yeah, there you go.
He's kidding. All right, now, if you had the opportunity to travel back in time, what advice would you give your younger self?
Oh man. So I would travel back to when I was like 20 and just say, like, start investing in real estate now. Like,
Right?
don't mess around with all the consulting and stuff for the next however many years. Just
Right.
buy a duplex and house hack it and rinse and repeat.
Amazing.
And
Amazing.
scale. Amazing. Now, what's the best investment you've ever had? Or sorry, you've ever made, but it can't be the one in Atlanta. So tell us about a different one.
Well, the most I've ever made on an investment was just being relatively early into Bitcoin and crypto and stuff. I mean, that's definitely best ROI. I remember though, I mean, as early as I was, I remember I had a roommate, and it had to be like 2011, and he's like investing in Bitcoin. I'm like, what the hell are you, what is this? Like, what are you investing in? And he was right on, right?
When did Bitcoin start?
Right around that time,
Right around that
2011
It
approximately.
was like, right. Yeah. It was
Wasn't
very
it like
early.
$50 per Bitcoin or
No, it
something?
was nothing. It was
No. It was like less than a penny. It was
Yeah, it
a
was-
fraction. It was like
Really?
the first, there's one of these stories is like
pizza.
one of the first transactions was like a Papa John's pizza. And it was like, I don't remember how many thousands or millions of Bitcoin for like a pizza.
Yeah, the guy, they were doing a transaction. He's like, okay, send me a pizza. So
Yeah.
he buys a pizza with his credit card, and the guy in turn sends him Bitcoin. But it
Okay.
was lots of Bitcoin. Anyways,
Yeah.
All right.
All
All
right.
right. Okay. Now, what's the worst investment you've ever made, and what lessons did you learn from it? Now, you talked about the crowdfunding
Yeah. So
platform.
that
That was
that-
probably.
I mean, that's got to be it. That's the only one. I mean, it's the only one I've ever lost money on. At least at real estate wise. I mean, I'm sure I made some like stock picks that I lost money on from time to time, but that was the only real estate one that I've lost money on.
Ken, quick question for you. This is something that we don't explore. I think we should start exploring it more. But when a
Sure.
deal does go sideways, there's still a asset that exists there that people might want to live there. There must have been a reason somebody bought something. They might have messed up with a business plan and went belly up. But the property's still there. And you were talking about getting still some funds back from that project. Is the property, is the physically structure still there? Is people still living there?
Oh yeah. Yeah. I mean, it's still there. It's still there. The guy just lost ownership of it. He defaulted on the loan.
Got it. Got it. That makes sense.
That
So he
makes
lost
sense.
ownership of it then in that case. Okay, got it. Perfect.
Yeah,
Okay.
it's all just unwinding.
Yeah, got it. Okay, now next question. How much would you need in the bank to retire today? What's your number?
To retire today, gosh, I don't know. Good question. I don't know. I don't know that I want to retire today. I mean, if I had, I don't know, it's probably gonna be higher than, I don't know, like 20 million.
Nice.
All right.
Got to be a decent number. I mean, I'm having a lot of fun with what I'm doing. Like more than just retire. I just want to create a business that doesn't need me every day.
Yeah, beautiful.
Absolutely.
I love it. All right. If you could have dinner with someone dead or alive, who would it be?
Dinner, dead or alive? I don't know why it just popped to my head. Abraham Lincoln.
Cool.
We've had that before.
I
Very
mean, he's
cool.
cool guy, right?
Yeah.
Yeah.
Absolutely.
First person that popped in my head.
Yes.
Fabulous. Okay, now next question. If you weren't doing what you're doing today, what would you be doing now?
That is a good. I'd probably still be in consulting, which wouldn't be what I want to do. If I could do anything else that I wanted to do, I would. I think it'd be cool to be a race car driver. I just went to the Indy 500 on Sunday, and every year I'm just amazed by these guys that go around that track at 220 miles an hour. But that's got to be an exhilarating feeling.
Oh yeah.
They lose 6 or 7 pounds in the race while they're sitting there because there's no AC. The AC is too heavy. So these guys are literally sweating and they're moving around there.
Really? I've always, you know what? I think that's what I would do too. I always had a need for speed. You know what I mean? So I think it would be
You're a
really...
fast driver and a fast runner. So you're just like all together.
So I'm with you on that, Kent. I think that would be my choice too. That would be awesome.
That'd be a pretty awesome job. Yeah.
Yeah, absolutely. Okay.
Or like a stunt driver. That'd be cool too.
That'd be
Yeah,
cool too.
yeah.
Okay, right on, right on. Now, next question, my favorite question. Book smarts or street smarts?
Street smarts.
Nice.
Yeah. Book smarts don't get you very far. Especially there's a lot of people in the world that have a lot of book smarts, but are bad communicators. And I think that's a really bad combination. I'd rather be a good communicator and not be so book smart.
Communication is everything in business and spousal
Relationships,
and everything.
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 I didn't think you meant that. I thought you meant this other thing. Anyway.
Okay, last question. If you had $1 million cash and you had to make one investment today, what would it be?
It's a very specific question, Kent. It's $1 million
You're
cash.
a savvy investor.
Yeah, you're a savvy investor. You can make only one investment. It has to be done today. Well, today, it's a little bit late here, but
let's talk
about just like the next 24 hours, the next little while here. It's pretty quick. You got to do it pretty quick, man.
Yeah. I mean, I think right now where with how much the market's down, there probably would be some decent opportunities in the stock market. But I would, I feel like I should say a real estate answer. But I think yeah. I mean, right now, if you had to put it in like today, the most liquid thing would be put it in the stock market, and at least things are down 30% in the U.S. here from where they were at the beginning of the year.
How about
sure.
Bitcoin? Because Bitcoin's kind of on that. It's time to buy.
Yeah, following the
It's
same
time to
trajectory
buy.
of the market. So
A little bit, yeah.
Yeah, and that could be a good one. Like, I think, Bitcoin is obviously much more speculative. It obviously moves up and down with the market, which it's not technically supposed to, right? It's supposed to be a store of value. I don't necessarily think it's going to like 10x or 100x again. I think, maybe it gets back to double, but it's kind of already been there. So I think, I think I'd probably stick with something in
Stock
the market.
It is.
An
Awesome.
actual stock.
this comes from a guy who heard about Bitcoin in 2011, right? So it's hard to see this thing going that kind of trajectory.
Yeah, I didn't invest in it that early. I'd say I was a few years behind, but I got in early enough.
Awesome.
Awesome.
All right, man. Perfect. Maybe this.
Kent, what's the best way people can reach you? If you want to just let everybody know, please.
Yeah, sure. Well, we talked about the website. I mean, that's the best way to reach me, kentritter.com. And you can sign up to be an investor. You can see the deals we have going on. You can go to the new investor section. You can check out the blog. We do a weekly blog. We got the podcast going on. So that's definitely home base.
Amazing.
Fantastic. Thanks for bringing so much value to our guests, listening to our show, and to us ourselves. We really appreciate you coming on today.
Absolutely, man. Really appreciate it. Thank you so much. And awesome.
All right. Thanks, guys.
Thank you for joining us for this episode. We hope this conversation enlightened you on how to win big in this highly profitable and risk-averse space. Get on your feet and embrace this world that offers so many opportunities just waiting for you out there. Continue your journey to becoming a savvy real estate expert by subscribing to the show at cpicapital.ca. Don't forget to leave a positive rating and share with your friends. See you on the next one.